Wealth doesn't just happen. It's built, brick by brick. Picture this: a life where financial freedom isn't just a dream, but a reality. Imagine waking up without the weight of money, worries holding you back. Sounds enticing, right? Yet, most people remain stuck in the cycle of paycheck-to-paycheck living.
Why?
Because they miss out on the secrets that can change everything. What if you could unlock the door to wealth with just a few simple changes? Each secret is a stepping stone, a key to a mindset that transforms how you think about money. But here's the catch: knowing is not enough. It's about taking action, diving into the journey, and making choices that align with your goals. Think about it. What if one small shift in your daily habits could lead to financial security? What would that mean for your future? Stay with us as we unveil these essential secrets. Each one is designed to empower you, to guide you from where you are now to where you want to be. The path to wealth starts today. Are you ready to take that first step? Let's dive in. But first, subscribe to the channel. Here you'll learn how to boost your income and invest smartly. Turn on notifications so you don't miss any tips. Let's go. Importance of financial education. Understanding the basics of personal finance, investments, and economics is crucial for anyone looking to make informed decisions. Financial education empowers individuals to navigate the complexities of money management. When people grasp essential concepts, they can better assess their financial situations and make choices that align with their goals. It's not just about saving money, it's about knowing how to grow it effectively. For instance, learning how interest rates work or what inflation means can significantly impact your financial planning. With this knowledge, individuals can avoid common pitfalls, such as accumulating debt or falling for scams. Financial education also fosters a sense of confidence. When you understand how money works, you're more likely to take proactive steps towards securing your financial future. Moreover, financial literacy is increasingly important in today's fast-paced world, where financial products and services are constantly evolving. By staying informed, individuals can take advantage of opportunities that may arise, whether it's investing in stocks or understanding new saving accounts. This awareness can lead to smarter, more strategic financial choices that build wealth over time. In essence, financial education is not just a nice-to-have, it's a necessity. It lays the foundation for a secure financial future, helping people to make decisions that can lead to financial independence. The earlier one starts learning these concepts, the better equipped they will be to handle life's financial challenges. Setting financial goals. Establishing clear and specific financial goals is a powerful step in managing your wealth. Short-term goals, like saving for a vacation, and long-term goals, such as retirement planning, are both essential in creating a roadmap for financial success. With well-defined goals, individuals can focus their efforts and resources in a directed manner. Having specific targets helps in prioritizing spending and saving habits. For example, if your goal is to save for a house, you're more likely to cut back on unnecessary expenses. This focused approach not only makes it easier to track progress, but also keeps motivation levels high. Regularly reviewing and adjusting these goals ensures that they remain relevant as life circumstances change. Another important aspect of goal setting is the ability to visualize success. When you have a clear picture of what you're aiming for, it becomes easier to stay committed. This visualization can serve as a constant reminder of why you are making sacrifices today for a better financial future. Furthermore, setting milestones along the way can make the process more manageable. Breaking down larger goals into smaller, achievable steps creates a sense of accomplishment and boosts confidence. Every time you hit a milestone, it reinforces the idea that you're on the right path, encouraging you to keep pushing forward. Creating an efficient budget. Learning how to create and stick to a budget is a fundamental skill in financial management. A budget serves as a financial blueprint, helping individuals understand their income and expenses. By listing all sources of income and categorizing expenses, people can see where their money is going. This awareness is the first step in taking control of one's financial situation. With a budget in place, it becomes easier to identify areas where spending can be reduced. Maybe you're spending too much on dining out or subscription services that you rarely use. Recognizing these patterns enables you to make informed decisions about where to cut back. This, in turn, allows for more money to be allocated towards savings and investments. Moreover, a well-structured budget can serve as a safeguard against overspending. It acts as a cap on discretionary spending, encouraging individuals to think twice before making impulse purchases. By following a budget, you can develop healthier financial habits that lead to long-term benefits. Tracking your budget regularly is essential for its success. Periodic reviews help in adjusting for any changes in income or expenses, ensuring that your budget remains relevant. This ongoing evaluation also allows you to celebrate your financial victories, no matter how small, reinforcing positive behaviors. Finally, budgeting is not just about restriction, it's about empowerment. Knowing exactly how much you can spend gives you the freedom to make choices that align with your financial goals. It transforms the way you view money, shifting from a reactive mindset to a proactive approach in managing your finances. Building an emergency fund. Building an emergency fund is one of the smartest financial moves anyone can make. Life is full of surprises, and not all of them are pleasant. Whether it's an unexpected medical bill, car repair, or job loss, having a financial cushion can save you from sinking into debt. It's like having a safety net that catches you when life throws you off balance. To start, aim to save at least 3 to 6 months' worth of living expenses. This might seem daunting, but breaking it down into smaller, manageable goals can make it easier. For instance, set a target to save a specific amount each month. Over time, those small contributions will add up, and before you know it, you'll have a nice little stash ready for emergencies. Another tip is to keep this fund in a separate, easily accessible account. This way, you're less tempted to dip into it for non-emergencies. A high-yield savings account can be a great choice. It allows your money to grow while still being available when you need it. The key here is to resist the urge to use this fund for everyday expenses or impulsive purchases. Remember, having an emergency fund not only protects you financially, but also provides peace of mind. Knowing you have a backup plan can make you feel more secure in your everyday life. It allows you to focus on your financial goals and investments without the constant worry of what if something goes wrong. In summary, building an emergency fund is all about preparation and security. It's a crucial step in maintaining financial stability while you work towards your long-term wealth-building goals. So, take that first step today. Your future self will thank you. Consistent investment and the importance of diversification. Investing consistently is key to building wealth over time. Many people think they need a lot of money to start investing, but that's a myth. The earlier you begin, even with small amounts, the more you can take advantage of compound growth. Consider setting up automatic contributions to your investment account. This way, you're consistently putting money to work without even having to think about it. Diversification is another vital aspect of investing. Instead of putting all your eggs in one basket, spread your investments across different asset classes, such as stocks, bonds, and real estate. This approach helps to mitigate risk. If one investment is underperforming, others may be doing well, balancing out your overall returns. Think of diversification as a way to protect yourself from the ups and downs of the market. By holding a mix of investments, you're less likely to experience significant losses. For example, if you invest solely in tech stocks and the market takes a hit, your portfolio could suffer greatly. However, if you also invest in bonds or international stocks, those can provide stability during turbulent times. It's also important to review and adjust your investment portfolio regularly. As you get older and your financial goals change, you may want to shift your investment strategy. For instance, you might want to be more conservative as you approach retirement. Regular check-ins will help you stay on track and ensure that your investments align with your current financial situation. In conclusion, consistent investment and diversification are foundational principles for anyone looking to build wealth. By starting early and spreading your investments wisely, you can enhance your chances of achieving your financial goals while minimizing risks along the way. So, roll up your sleeves and get started on your investment journey today. Understanding the power of compound interest. Compound interest is often referred to as the eighth wonder of the world, and for good reason. It allows your money to grow exponentially over time. When you invest, you earn interest not just on your initial principal, but also on the interest that accumulates. This means that the earlier you start investing, the more you can benefit from this powerful financial tool. For instance, if you invest $1,000 at a 5% annual interest rate, in just 20 years, you would have approximately $2,653 thanks to the magic of compounding. Many people underestimate how impactful compound interest can be. They might think that saving a small amount won't make a difference, but that's where they're mistaken. Even modest investments can lead to significant growth over time. It's all about giving your money time to work for you. Investing early and regularly can lead to substantial wealth accumulation, as the interest you earn will continue to compound on itself year after year. However, it's important to remember that compounding works best over longer periods. The more time your money has to grow, the more you can take advantage of this phenomenon. This is why starting to invest early, even if it's a small amount, can be incredibly beneficial. It's like planting a tree. The sooner you plant it, the larger it can grow over the years. Another key aspect of compound interest is reinvesting your earnings. If you take the interest or dividends you earn and reinvest them, you're essentially turbocharging your compounding effect. This creates a snowball effect where your investment can grow at an accelerated rate. So, the next time you receive interest or dividends, consider putting that money back into your investment rather than cashing it out. Lastly, understanding compound interest helps you appreciate the importance of financial literacy. Knowing how to manage and grow your money effectively is crucial for achieving your financial goals. By grasping the concept of compounding, you empower yourself to make better decisions that can lead to a more secure financial future. Long-term mindset and patience. When it comes to investing, having a long-term mindset is essential. Many investors make the mistake of seeking quick returns, often leading to disappointment and rash decisions. Markets can be volatile, and prices can fluctuate significantly in the short term. Those who focus on the long-term trend, however, tend to fare much better. By maintaining a long-term perspective, you can ride out the ups and downs of the market without succumbing to panic. Patience is a crucial virtue in the world of investing. It's easy to get caught up in daily market news and feel pressured to make quick moves. However, successful investors understand that wealth building often takes time. They are willing to wait for their investments to mature and appreciate, rather than trying to time the market. This patience not only helps in maintaining a steady hand during market turbulence, but also fosters an environment where compounding can take place effectively. Moreover, a long-term mindset encourages you to focus on your overall financial goals rather than short-term fluctuations. This approach helps you to stay committed to your investment strategy, even when the market gets choppy. By reminding yourself of your long-term objectives, you can resist the urge to react impulsively to market changes and stick to your plan. Additionally, cultivating a long-term perspective allows you to take advantage of opportunities that may arise during market downturns. Rather than selling off your investments in a panic, you can view these times as chances to buy quality assets at a discount. This contrarian approach can lead to greater long-term gains as the market eventually recovers. Lastly, embracing a long-term mindset is not only about patience in investing, it's also about continuous learning and adapting. As markets evolve, so should your strategies. Staying informed and being willing to adjust your approach while keeping your long-term goals in sight can make a significant difference in your financial journey. As we wrap up, remember that building wealth is a journey, not a sprint. Each of these 7 secrets is a stepping stone toward your financial freedom. Are you feeling inspired to take action? Picture yourself a year from now, confidently making investment decisions and watching your money grow. What steps will you take today to start this journey? Don't forget, consistency is key. Set small, achievable goals and celebrate your progress along the way. Have you thought about creating a budget or exploring new investment opportunities? The choices you make today will shape your financial future. And here's a thought. What if you shared these secrets with a friend? Imagine the impact you could have by motivating someone else to start their own wealth-building journey. So, what's your next move? Will you start that budget or maybe dive into learning about stocks? The possibilities are endless, and it's time to seize them. If you found value in this video, hit that like button and subscribe for more insights. Share your thoughts in the comments below. What's the secret that resonated with you the most? Let's keep this conversation going and empower each other to achieve financial success together. Now here on your screen is a video prepared with all the details you need to succeed in your financial life. Just click and I'll meet you there.